Dan's a fantastic man. He really is.
What's going on, everybody? This is Dan French. This is another French Workbench podcast. Thank you guys for tuning in. It's Saturday, and we have a great show for you guys today. We're going to have a lot of great information. We got a home warranty here, and also an appraiser here. We also have Matt Shields back, and we're going to go around the room and introduce everybody. We're going to talk about demographics that's going on today here in Las Vegas and how that's going to affect the housing market. And we also got Mr. Joe Dragon. He's going to talk a little bit on the attorney side of things. And let's get right into it. Guys, I just want to say thank you so much for coming in and being a part of the show. This channel is the most real and behind-the-scenes information regarding real estate, financing, money talk, entrepreneurs, educating through on-job experience here in Las Vegas. And guys, we really appreciate the help and all the time that you guys come in here and spend with the show. And if you guys haven't hit the like button, please hit that like button. Also, if you have any comments, comment in the comment section below. We want to get your questions answered. We want to know what's going on with you guys out there today. And you can call in studio 702-557-6176. Again, so we're going to go right across here. I'm going to talk to Mr. Matt Shield. What's going on today, Matt? What's going on, buddy?
Good morning. What's going on? Woke up, got out the right side of bed, in a good mood, and hopefully going to sell some real estate this afternoon.
Right.
That's what's going on.
So what's going on, man? You've been hitting the pavement, huh?
Yeah, I did. I took a new listing, sold a house, set a record. I'd mentioned about this before. They bought the house in February for 1.125 million. I put it into contract for 1.2 million.
Yeah.
To help the seller. They decided they want to move back to California.
Wow.
Which is only the second time that's happened in 5 years, when people go in that way instead of coming this way. And then there was a problem across the street. I sensed there was a problem across the street, so I went and said hello. And then I'm selling the neighbor's house.
There you go.
Yeah, for 1.125.
You're a likable guy, though. I mean, you probably know a lot of your neighbors. You talk to a lot of people, right?
I just give really good lip service.
You know, Matt, I've heard that from you. That's the word on the street, that you're really good with that.
Good lip service and get it done.
Absolutely. We also have Mr. Andy Papazian. He's back. He's an appraiser and Fidelity Appraisals. Is that right?
That's correct, yeah.
Okay, so what's going on with you today, man? How you been?
Well, good morning, Dan. Great. Business has been great. A lot of transactions going on. Just came back from a little vacation to Oceanside.
Oh,
which was great. Now back to reality, though.
Yeah, I mean, was it packed over there?
It was pretty good, actually. Yeah, there was a lot of people. A lot of people,
yeah. Huh? So everybody's not really worried about this more of an outbreak or a re-outbreak of the COVID,
I didn't
right?
see it at all.
Nothing, huh?
Nothing. And in San Diego County, pretty much nobody was even wearing masks.
Really?
Yeah, good.
So I was like,
yeah, that's going to be I think that's going to be something we're going to have to really face here shortly.
Yeah,
you know, it's going to be where are we going to go back to the old process of getting masks everywhere?
Sure.
I have some clients that are in that. It's called PPE space, personal protection equipment.
Yeah.
And they're getting ready to ramp up. So I think it's like, I think masks are coming back. Maybe they're going to try and bring them back,
right?
And people are going to resist.
Well, they're going to resist. I think people, they obviously don't want to. They don't want to have to go back to something they probably didn't enjoy.
Yeah.
But unfortunately, it's like, hey, you know what? I was talking to somebody about this, and they were like, they went to Hawaii, and
Hawaii's really strict.
They're very strict. Yeah. More of a community though, where they're saying, you know what? We're all going to just still follow the rules because we're thinking about the next person up. You know what I mean? Like the next person next to me or my family or somebody, I don't want to contribute to the cause. So it seemed like everybody, even though you don't have to wear a mask, well, that's what he's saying. Even though you don't have to wear a mask, they're still electing to wear a mask. Yeah.
Hawaii slammed Nevada and said that they made a public warning statement from the state of Hawaii Health Department not to visit Las Vegas.
Really?
Yep, because they said, because people aren't wearing masks in casinos, that they're going to bring the new variant back to Hawaii. But the thing is the new variant is predominantly being experienced by people that have had the vaccine.
Yeah.
And so it's like no one really knows what's happening.
Is that true?
It's really, I mean, Do you know?
If you had
is
the
it-
vac.
I know somebody that had the vaccine and just had COVID again.
Yeah,
so
so-
did I.
so-
Yeah,
so
did
here's
I.
the thing.
But I
Here-
know that was like scientifically
yeah,
like.
but it's all.
Yeah.
Here's the thing. I think whoever's got the loudest trumpet like has the most influence because you can slice and dice the science however you like.
Yeah.
Absolutely.
Right,
You know, so everyone has to feel comfortable with what they're doing, and you know, I don't. What would be the implications of another shutdown for Vegas?
Yeah. I don't know.
What's the
Wouldn't-
long-term implications of this?
We'll get into
Wouldn't
that in
be
a
good.
second. We got Mr.
Yeah, yeah.
I want to introduce Joe Dragon here. He's
Us.
back. He's a real estate, not real estate attorney. You're an attorney.
Well, I'm real estate.
Real estate attorney, yeah. Okay.
I
So
mean, I do business attorney, real estate attorney. When
What do you-
someone says they're attorney, they pretty much do it all.
They
But,
do it
you
all.
know, you gotta have labels on things. But yes, I do mostly business. I've done a lot
Business.
of real estate.
Yeah, I was
Done
going to
some
bring up
criminal
business
defense, too.
attorney. Okay.
So we'll get into what we're talking about.
Well, what have you been up to, man? Where were you at? You've been gone for a while, right?
Oh, I had a baby.
Yeah, you
Well,
had a
not me.
baby.
My wife had a baby,
Congratulations.
and then her parents have a place up in Santa Rosa, California.
Right,
So we kind of took maternity leave there. So
right, right.
and it was nice. It was like 92 high. I was looking at
Nice.
my phone. It's like 120 down here. I'm like,
Yeah.
coming back even another week. So, but yeah, now I've been busy making sure my son stays alive and drinking wine when I can.
Dude, I love
So-
wine. I'm a red wine drinker. You
Oh, you are?
Yeah, are you a red wine drinker too?
I wasn't until I met my wife.
Okay.
Because they live in like wine country and all that.
I see.
And then it's delicious.
Yeah,
you should
I-
make a trip with me one time.
Yeah, man. I mean, I'm down. You know, we should definitely take a look at that. Also, we have Mr. Scott Hogue from. Go ahead and say your name.
Dwellness Home Warranty.
Dwellness Home Warranty. So, what's going on with you today, Scott? How's life?
You know what? I too am coming down from a ridiculous situation with reality. I was in La Jolla last weekend, just down the road from you. And
Yeah.
What was weird is I got to the hotel. Well, like you said, no masks whatsoever, zero. And I was staying at Torrey Pines. And,
Okay.
they go, we have a problem with your reservation. And I'm like, I don't know about that. And they said, are you related to the Hogues of Orange County?
Hogues of Orange County.
There's Hogue Hospital. There's a philanthropic family there. And of course I said, oh yeah, for sure. I've no relation. I have no idea. And they go, oh, well, we can upgrade you to this suite upstairs. It's the championship suite. And I
Oh,
said,
okay.
Okay. Oh my
Alright.
God, 3,000 square foot hotel room. It was with a piano and everything else. It was ridiculous. Only problem is now my kids are going to be like, when we check in somewhere else, they're going to be like, what the hell? Where's the dining room table? Where's the piano?
Yeah, where's it all at?
Totally overplayed my hand on that aspect.
That's
that-
funny how
how's
that
that-
works. Because I had a friend in England who's in the Royal Marines, and he was a lieutenant, which is like entrance rank, and then he became a captain, which is second rank up.
Yeah.
But like that's different for the Royal Marines. But he was in Bangkok, and there was a big battleship in the harbour, and because he said he was captain and he was in his uniform, the hotel thought he was the captain of that ship in the harbour, and they upgraded him to the presidential suite, and he was like,
Well, that was easy.
hey, just
yeah.
take it,
Yeah.
you know. But so you got upgraded because your last name's Hogue, and they just said, oh, we're gonna
Yeah.
give you a hoagie.
Yeah, pretty much. They
You should be like, you should be booking there every week.
I would love to. The room is
Wow.
ridiculous. It had like a special side entrance for them to bring in, the
The
dinners
children.
and everything else. And serve it at the 12
How's your,
dinner table and everything like that.
How's your piano abilities?
I didn't play. My daughter played.
Okay, as long as it got put to use.
Yeah. It did get
I feel like every time in a big suite, I got to use everything, right?
Oh, yeah.
It's like I didn't shave, but I need to shave because they gave me a razor. You know how it goes.
So let's talk today about real estate, and let's kind of get into some things that we want to bring up. We're going to talk real estate with Matt. We're also going to talk with Joe here about what his take is on what's going on in the housing market. Also, Andy's going to talk to us about what's happening in the appraisal world, and Scott's going to tell us about home warranty and some of the things that's going on out there. So let's get right into it. Let's talk about demographics. We know that right now the housing market's it's booming. Everybody's thinking that, it's going to stop at some point. And we talk about this every week, but I think the demographics is coming out showing we're on pace to close a high volume of loans this year, and it's actually more. We're on pace to close more homes this year than we had in, let's say, the last few years, right? And so, why is there such a frenzy? Well, it's because there's scarcity in the market. People know that there's not a lot of homes to choose from, and if you're on a waiting list for a new home, you're probably waiting 2 or 3 months. So you have a lot of problems where if you can't get into a home right away, then, you know, what's your alternative? So everybody's willing to wait. They're willing to, you know, go to bat and try to get into a house right now. Matt, you're seeing this firsthand. You've had people out there that in existing homes we're talking about right now. You just got somebody into a contract for an existing home at what, 1.2 you said?
Yeah. So there's not the multiples of offers. It's calmed down since 2 months ago.
Okay.
In my experience, like I'm seeing still a shortage of inventory. I'm seeing homes that are listed high and are sitting.
Okay.
A home that's priced effectively will go, especially a pool home, will go quick. But I think it's slowed down a tiny bit.
Yeah.
Like there's been a change, and also inventory's been creeping up as well. And so in the price points of like 500,000 plus, like I'm seeing it like not quite as like white hot aggressive.
Yeah.
And I'm seeing that I've seen some homes that are sitting, and I'm seeing that, you know, sellers are going to are having to like drop a little bit from how high they are.
Sure.
Because like earlier in the year, it was like a given that the home would go for like 20 or 30 grand more than what it was listed for.
Mhm.
But I'm not seeing that now. Like it's not like so aggressive out the gate, because the properties are starting off high.
What are they listing them at though? Beginning.
They're listing them at market value, or like 10 or 20 higher. Than
So
market
before
value.
what they thought market value just
Yeah,
wasn't reality.
so I
Now
think
you're listing that.
I think it may
market,
have
so-
caught up. There's a
Yeah.
chance it may have caught up. Like, and so if it has caught up, and then if inventory keeps rising, like gradually, it's not going up a lot, but I think we may have started the beginning of a new movement. But like the next 30 days, 60 days will show that if that happens.
Yeah, we're going to see that.
You
They're
know?
saying there's going to be like 8.5 million prints this year for existing homes in 2021. So they're looking at,
Maybe, yeah.
that's what they're looking at. I
Yeah.
mean, they're saying that obviously there's confidence in the economy or the market, even though that we don't have a lot of properties.
then-
You're saying it's opening up.
And then
So
something else though that I looked at, because I've got some sellers that I don't know where I'm going to put them when I sell the house, because they're selling to liquidate an asset.
yeah,
And, you know, they could buy whatever they like once they sell this asset. And they've got like money to get it done. But like, I don't know, you know, like I was looking at like, there's no good rental market is terrible.
it's terrible.
Yeah.
There's no short-term
Yeah.
rentals. Like, because often what I would do a couple years ago is, if it was too like tricky to find them where they want to be, then I would say, look, just get a short-term rental, cut down half your staff, put it in storage, and then just get a furnished rental for like $2,000 a month.
Yeah.
That doesn't exist anymore.
Are
You
you
know?
seeing the same thing out there, Andy? I mean, you're an appraiser. You're out there. You're looking at, you're obviously appraising these properties. Are you seeing it opening up?
Yeah, I too have noticed that. It's kind of obvious. It's not very subtle.
Well, you're doing the appraisal, so you're
Right.
like you're like having a look inside transactions as they're happening.
Absolutely. Yeah, we have to analyze the contract.
Like different
and we
ones.
see- yeah.
Yeah.
So we're kind of seeing the whole market and what's happening. I've also noticed inventory going up. Properties are staying on the market slightly longer, not very much
Not-
longer.
Yeah.
So there is a subtle change. Where this is gonna lead, I don't know yet.
So I just want to say, like, to back up what you just said, slightly longer means not going into contract in like
Same day
3 or
or-
4 days.
Yeah, right.
Like slightly longer means going into contract in like 2 or 3 weeks.
Yeah.
Right, yeah.
Like there was a time when, you know, I would communicate to my clients that if we're in contract in 30 days, that means we haven't undersold the house.
Right.
But now, like, to go into contract in 2 or 3 weeks instead of 2 or
Right.
3 days,
Mhm.
that's it's a small change, but maybe it's an indication of a different movement. But like the next 60 days will either be reinforced or it will, you know, go
Yeah.
back.
Also, in the last couple of weeks, I've noticed we're not getting these crazy ranges where they're offering 50,000 above and saying we're waiving appraisal.
Yeah.
That's starting
Kinda
that's starting to settle down,
it
isn't
has,
it?
It has, yeah.
Because it's caught up,
Right.
Yeah.
Right.
you know.
So we'll see where it goes from here.
Also, too, I think people want to know, like, you know, when they do offer that, it's kind of like it gets to a point where people just said, I had enough. Like, I don't want to do it anymore. Like, I'm not going to go into that frenzy of a market. I just don't want to get to that point and just say, you know, I might go 10 or 15, but then people just say, you know what, I'm not going to get into that whole bidding
Yeah,
for 40 or
and-
50. And
Yeah, I mean, the thing is, if you want a home, you have to play that game. But there has been some like fatigue from buyers, I think, and
Yeah.
also, definitely, there's been some fatigue with like getting all antsy about it.
Yeah.
You know.
Are
you
you
seeing-
talking about the warranty though,
Yeah.
right? Is that still going on? That they're waiving warranty? Or?
Absolutely.
Yeah, you got to.
Absolutely. And so we've had to remarket a little bit. I've done this in Phoenix. I spend 3 days a week down there. And what's happening is I'm offering discounted warranties to realtors that are using it as a closing gift for people because it's not in the contract. And it's working out well because 5 months down the road when the water heater goes out, the realtor looks like a hero because they're like, wow, this guy really took care of us, got us the warranty, now it's paying off big. So that's good. And then it also, on the flip side, they don't go, you sold us a piece of crap, what's going on with this?
Yeah.
Right.
And now all of a sudden, they've got to come out of pocket $1,500 for a water heater, whereas it could have been completely avoided with the warranty. But I understand, I get it. They're competing, people are stretched out financially, the seller's going, I'm not paying for anything. And so in that case, the warranty gets dropped, the appraisal gets waived, the sellers will say, in Arizona it's called the Binzer, which here it's the request for repairs, and they'll say, we want $5,000 worth of repair, and they're like, no, not gonna do it.
So when you say discounted warranty, you're talking about the buyer's purchasing that, right?
No, the agent for the buyers.
The agent's purchasing that, okay. Because I will say, from an attorney perspective, don't buy a house without any sort of warranty. You've got to come out of pocket, you come out of pocket, because
Right.
you have no idea what you're doing. And if you're talking about a $400,000 house, whatever the warranty is, trust me, you want a warranty. And don't
Yeah.
care what an inspector says otherwise.
So another thing is, what you can do is you can use the warranty. If you get like repairs or anything, then I say to the seller, look, give them their warranty if they ask for it, or offer them a warranty and just say no. We're getting your warranty. So if you want it, we'll give you a warranty.
Right.
If not, it's cool.
Right.
So I see, obviously, the demographics is showing that there's more properties on the market. What are you seeing out there with buyers? They're coming out here and they're looking for properties. Do they feel like there is more to choose from when you're out there showing them properties? Like, do they?
No.
Not really. They still
Yeah.
feel that there's.
No, I mean, it just depends on the buyer. Like for someone that wants to get started and have a single family home or townhome and get on the ladder FHA, then there's not a lot of they don't have a lot of maneuverability with being
Sure.
picky.
Uh-huh.
Like they need to get a contract.
Yeah.
And I think that I don't see there being like, with the amount of job creation here and the amount of people moving here and the amount of people that can't get an FHA home offer accepted, I'd see that there's going to be an affordability problem coming up for starter homes for people. However, like, you just got to take that, you just got to help yourself.
Yeah.
I mean, when I'm saying help yourself is that once you realize that you got to figure it out somehow, like, otherwise you're going to rent or live in an apartment, then I don't think there's any way that like affordable housing can be built in the valley.
Yeah. So
Yeah.
how long do you think it's? I mean, because that's obviously just a lack in supply because
Yeah,
of what
but, like,
happened. So how long?
But
'Cause
space.
that'll be taken care of though in 1 to 2 years.
I mean,
you
here's
would
the
think.
thing. I don't know, because like the only way to take care of that is to build really tiny small boxes like stacked up on top of each other,
Yeah,
and to
like
charge them
high-rises.
like 350. Not like high rises are expensive to build.
Well, right.
Do you know what I mean? Like, but
Yeah.
like, what I'm saying is to make much higher density housing. But I don't know. We'll see. It's just going to be, like we're becoming a bit more like California. Price. Some people are unfortunately going to have to rent, and it's going to suck
Yeah.
for them because they're going to have to rent or move somewhere where homes are affordable, like
Well, I
Tennes-
think
Tennessee
right,
or Mississippi.
Yeah.
You know
Well,
what I
that's
mean?
why you're
Do you
seeing
know
a
what I mean?
big spike up there, isn't?
Yeah.
What's
All
it
over.
called? Nashville's one of the. I think
Yeah,
Vegas and Nashville, one of the 2 highest growing
Yeah.
cities in the country.
Well, what do you make of all these higher end apartments I'm seeing pop up all over town? You see them when you're driving down the 95.
Yeah,
there's a
the,
bunch of them that are over by.
Well,
the
they're
strip. There's a
betting.
bunch
They're
of 'em.
betting on single-family homes not being affordable,
Right,
and they're
because-
doing. Those people, you look at the signs. They're spending hundreds of millions of dollars building like new apartment complexes because they're betting that someone's gonna pay like a couple grand for like a nice two bedroom apartment, and they're
Yeah.
gonna be okay with that, and that's
like San Diego, like LA.
yeah, like exactly.
Which may be the reality of the city, though.
Which-
I mean,
because we're becoming a big city.
that's
now.
what happens
Yeah.
when you become a big city.
Yeah.
I mean, is that really? But
It's not a
we
bad
got a lot of
thing.
room here, though.
Yeah, yeah.
Compared, I mean, but we got water problems. You
Yeah.
got, the type of things.
Yeah,
we
let's
run
talk
into.
about that in a second. The water problems. I want to bring that up. I also want to bring up some things about, what you see with Vegas and how this is all going to transpire with the whole mask opening up thing. But I want to talk a little bit about home affordability, and I want to talk about the first-time home buyer, because you look at the first-time home buyer, they're really pushed out of the market. They're the ones that's suffering right now because there's just not a lot of homes, and a starter home is like 400,000, or not a starter, but a getting into
Yeah.
a home is like 400,000. That's the starting point now. Hopefully that comes down, but they had the mortgage index come out and state that the mortgage index for mortgages is actually declining. And it means that banks are not, they're saying that banks aren't willing to extend or give loans out as easy as they were before. And
But do they do that by having stricter underwriting?
they do. Well, the thing is yes, that's what they're insinuating, that it's stricter underwriting. Yes, the guidelines are tightening up, but as experienced with IM, is what I'm seeing. Yes, is it getting more tightened as far as can you get into the same loan that you got into before? It's just small, subtle tighten. It's something that you're kind of putting a vice on just slightly. Maybe some of the debt ratios will be not as favorable. You can't go as high. Things like that. Maybe some of the programs and guidelines, but overall, I haven't really seen a drop off, and I look at these numbers all the time as far as mortgage applications coming in, and also mortgage credit availability that's given to these clients. I don't see the difference. People think that when that starts to happen, because it happened previously, banks don't want to lend money, and then there's a crash looming. I don't see that happening.
What kind of crash, though? I mean, talking about the crash that happened 10 years ago.
A crash is like, isn't that a crash defined as like more than a 25% drop in the
housing price.
Yeah.
Yeah, it's in the housing prices.
average
I mean,
price.
I think there's going to be a correction. We talk about this all the time, but then you look at guidelines are tightening up. I'm not going to say that they're not. And you look at the mortgage index, and it is declining a little bit. It's coming down, but I don't know if that's going to say, well, all banks now don't want to lend money.
So is there concern that the mortgage index is going to make it hard to get a loan? Therefore, there's not enough offers out there, and therefore you see a crash of 25% or greater.
Well,
I just don't see that happening
Yeah, I
today.
don't either.
I think this is an overreaction to the decreasing amount of cash-heavy buyers.
Yeah.
Because now you're getting into a situation where the people that are coming out here from California with $600 grand to put down on a house and take out a $2,000 or $200,000 mortgage, those are kind of drying up. So now you're facing the reality of higher prices and first-time home buyers,
Right.
FHA, like you're talking about. This is just a lagging effect of mortgage companies getting into higher loan-to-value ratios, where they're saying, okay, you want to buy a $400,000 house, but your household income is $55,000. That's where we're starting to go. Instead of the people coming in paying cash for houses, paying $100,000 over list cash for houses.
Right.
Those are drying up a little bit, and it's the reality of the mortgage situation coming into the new pricing.
Yeah.
That's my theory.
I agree. Look, what do you guys think? I mean, you guys think that home affordability is a problem right now with these new buyers, or just first-time home buyers, or just buyers in general, that maybe it's your average family? Because, look, I think you look at it from a banking standpoint, it's all about risk and profit, right? Well, if you have a higher price home, they're probably looking at it going, well, maybe we need to tighten up some things just to make sure that these people can afford this house. I'm not saying that, they're going to it's going to completely push them out. But for instance, we talked about second homes, investment homes. Used to be able to go a lot higher on trying to get the approval amount. You can actually increase it beyond that 45% debt
And
ratio.
we were bantering about that before the start, though. But that's the question I had. Are people buying homes for investment, right? What are you guys seeing? Are you guys seeing the family that needs a place to live? Or are you seeing more
I'm
like...
I'm not seeing a lot of investment
Right.
purchases. I'm mostly seeing like investment
Which
liquidation.
is a huge difference. Look, we have a crash in the 80s, right?
Right.
A crash in and that crash in the 80s was nothing like the crash in 09, 07,
Right.
whatever it was. But that was very motivated by this idea of the endless gold mine going on then.
But
and it's not, I don't see that happening
so
today.
also, in reference to like, there's not going to be a crash, is because at the last recession, hedge funds came in and they started buying homes, and they started buying cold. When I say cold, they just said, "Oh, we're going to buy homes," and they didn't have an architecture to do so. And you'd had like one person, and then that company. Right. This is one company that I worked for. We started off with one person, and he said, "I'm going to buy 3,000 homes," and then within 3 months there was 70 people in the company.
Yeah,
and that's what we were doing. It's like the analogy is like taking, building a plane and then taking it off and then building the plane out as you're flying. So that was in like 2009. So they started out with like a little like Wright brothers thing, and now they've got like a bomber. There's like bombers circling around the valley, hedge fund bombers that are fully equipped with all the technology and gadgetry.
They're still buying. They're still buying here in Vegas too,
but
even
like
in this market.
if there's a decline in the market or there's a crash, right? Yeah. Those hedge funds are just going to open up the cargo holds and just drop money on the valley, scoop up all the homes, rent them out because for the yield,
right?
And then that's going to shut out all the first-time home buyers. So that what that is it's a safety net around the valley. Like Blackstone bought multiple casinos. Like they've got like 120,000 single-family home investments across the country.
Yeah,
and they're ready. They're praying. The hedge funds are praying for a correction, but I don't think it's going to happen. But if it does happen or it starts to happen, they'll just pull a lever and they'll just start sucking up all the properties
to rent it at that
to rent
point,
it out, which isn't going to help affordability, and it's not going to home owner occupiers.
Yeah, I mean,
you know,
I think if you're talking about a decrease in home values by 25%. Is that possible? Yeah, but I don't think it's going to be the leader because that's what you're talking about. It's going to be something like maybe you hit a bad inflation problem, which could happen in the next 4 to 5 years. Something causes the economy to crash like something always does.
Or there's a war. Or a war.
Yeah.
Or something like that.
Yeah,
something like from the
I'm not worried about buying a house if we go into war. But
yeah, do you know what I mean? Yeah, but something like that could happen.
Yeah.
But like with what we're seeing with the trends, we're seeing it like leveling off, but like, you know, some unknown event could attack that, but it's impossible to say if that could, like, even like a well-known broker in town is so adamant about this that he said, I will bet 10 grand with anyone everyone says, oh, the market's going to crash.
Yeah.
But he said, I'll bet 10 grand that the market does not crash, which means go down more than 25% in 3 years. And he bet like 10 grand saying, I'll take 10 grand bet with anyone. No one would take the bet.
Yeah, because I completely agree with that.
You know, but I did think it might be an idea. I haven't said this to him. I said, would you take a $500 option bet? So I give you $500. It's yours now.
Right.
But I can exercise the option to bet 10K in, I was going to say 4 years. But I thought it might be a fun way to spend 500.
You guys are trading derivatives on bets, and
it's true.
What's going on?
Yeah.
I think you look at it too, though. Like you look at when you talk about housing and then affordability, and you talk about demographics, and I think everybody's waiting for, like you said, Matt, it's starting to level off and properties are starting to come out. But I still think we're going to continue to appreciate. They're talking appreciation here, 15% here in Las Vegas. Next year, it's going to slow down. It's going to be more like a 7 to 8%,
which is fine.
Which is great.
You don't like that out of control appreciation.
Sure.
Yeah, that's because everybody like scared, whether you're a buyer or a seller.
Right.
But I mean, what we talked about it earlier, the A's are probably coming to town.
Well,
right?
Listen, I can't say for sure, but we did. The A's may be coming to town.
If it's not them, it's going to be somebody else because this is a really big sports town.
Yeah.
You can see an NBA team. What I'm seeing here, though, is like kind of this transformation from Vegas, from like a mid-city kind of place known to more like
city.
A Phoenix type of city where it operates much bigger. I mean, housing prices of Phoenix have always been much higher than Vegas, just because of its activity.
So you look at when we're talking about the home affordability and also the situation with lending. Lenders, they don't. I mean, when you look at Fannie Mae, Freddie Mac, they want to buy only so many mortgage-backed securities and things from lenders.
Right.
That's not a big portfolio that these lenders are selling to Fannie Mae, Freddie Mac. So they don't. The reason why prices go up and why pricing on, let's say, second homes, vacation homes, or investment properties is not as good, let's say, for rate or also why is it so more restrictive, much more restrictive, is because they don't want to keep that much of a portfolio. I think that we only sell as a company like 10% of that, or they keep that on 10%, and then we have to actually hold the rest. So these guidelines that come in, a lot of people, I'm bringing this up because a lot of people are buying second homes coming out of state, and when they buy these second homes, they're using like they want to get a letter saying that they can work from anywhere. Right. A lot of our people that we work with, Matt, they come from California. So it does play a part in how you can get approved versus, say, a primary residence. So what does it tell you? It just tells you that overall lenders and guidelines are promoting the primary residence buyer. They're not promoting people that are trying to buy a vacation or secondary home or investment property.
That's all.
That's all it is.
Regulation going on.
And I think you start to see things like that tighten up. And those are kind of the things I see. But as far as the availability for primary residents, people out there looking to buy a home, there's nothing that's really changed too much as far as how it's gotten more restrictive. It's just different programs have gotten maybe a little bit more restrictive, or maybe they need to tighten it up or button it up a little bit. You know, for instance, if you were on COVID, let's say that, or during COVID, let's say you did get that letter, employers want to know that that's going to continue after you get back to work or things get back to work. Some employers want you to come back to work, right? But they're just wanting to say, well, okay, you can work in any state. Will this likely continue after you buy your house? You know what I mean? Will you still work from home?
Yeah,
You know what I mean?
maybe. It depends on the role. Like I've seen a lot of like tech workers can do that.
Yeah.
But like, so that would make, because they work on, they're doing online
Sure.
work from home, and the tech companies can get better talent now, I've heard, because they can reach out to people and people don't have to move their lives to go work for like a well-known like tech brand.
Right.
Well, yeah, on your guys' point, because it's very interesting because I don't know how that's going to play anything, but I'll tell you, the way I look at this is like the way we've gone to in the last year because of COVID, working remotely, that
won't go back.
No, it's like the automobile being
it's
invented.
cheaper
It's
for the
literally
companies.
like the automobile because you can get talent anywhere in the world. You don't need them in your office. And by the way, the employees, no one wants to go into work. I mean, you probably go into work a few days a week, but serves both parties so much better that if you're thinking I'm going to sit in the brick and mortar office and force my employees to come in, you're an idiot in my opinion because you can't play that game anymore.
No.
Depending on what you do, obviously with construction, somebody has to build that. But
Right.
Yeah.
I want to bring this up too, Andy, because you're out there and you said that the prices are coming down. I have a couple of questions. So the first question I have for being an appraiser is if you meet somebody out there that's, let's say a realtor, let's say Matt goes out and meets you because it's a listing. Does it, I'm not going to say it plays a part, but if he brings supportive facts or information that shows that value's there, do you take that in consideration?
Absolutely. Absolutely. In fact, a lot of times when I call the agent to make the appointment or tell them what day and time I'm going to be there, I also say if you've got some comps, send me the MLS numbers. I'll pull them up myself.
Yeah.
Don't do it after the fact because I'm not even going to look at them after the fact.
Sure.
Because if you give me comps and I do consider them, I have to take pictures of the outside of those properties. I'm not going to drive 20 miles to go back, take a picture of a house.
Yeah.
So if you've got something, please either bring me the comps or give me the MLS numbers before I go there.
Right.
There's nothing wrong with that. They're not convincing me to push value. A lot of times those comps they give me, they're not even comps. I won't even use them, because they're either much smaller homes. So they're banking on, okay, it's a smaller home, so he's going to have to adjust for gross living area.
Yeah.
It doesn't work like that.
It's true. Yeah. It doesn't work that way.
Unless there's absolutely no comps in the area, then I have to expand out. I have to look at bigger, smaller homes, make adjustments. But if there's plenty of comps and I go out and do these other things they want me to do, we're all going to get in trouble.
So, I mean, you're not going to inflate it.
Yeah,
But, for instance, I got somebody that came in and this just came in yesterday for me, which was an appraisal came in 35,000 below. And they're like, look, this property just sold. And this property was on the market. It's potentially going to sell. And all these other things. So we do a reconsideration of value. How much do you really look at that? Because in this market, I'm sure you're getting a lot of people that are trying to do a reconsideration of value, right?
Not a lot. Every
Really?
once in a while it happens. A lot of times they know what they're getting into, The agents already know what's going on, and they're expecting something not to go right.
Yeah.
But sometimes they will provide comps, and once in a while they'll make sense. For example, one happened where the comp they provided me closed the same day I was at the property. There was no way for me to know that that property was going to close that day, right?
Yeah.
Unless I was using, sometimes because I do get either 2 pending or 2 available listings, and I look at the potential closing date on the pending sale, and if it happens to be the same day I'm going to be there, I take that comp with me. And if it actually does close that day, that becomes one of my sold comparables. If it doesn't, I can use it as one of my pending comps that I have to put in.
Do you think though, like as an appraiser, and maybe you guys have seen this too, I don't know. Is it almost like a challenge to you as an appraiser if somebody sends you something and says, "Hey, I got information. They sent me all these documents to show that this property should be appraised at a higher value," because that can either make or break a deal. And we know this, right? And especially in this market.
Right.
Now, I think it's starting to come down, like Matt was saying, where things are starting to kind of maybe ease back a little bit. But do you get a lot of people that think that, you know what, I'm going to challenge you, and how do you feel about that?
You know, when I first started out, I used to get upset over it, like, how dare you? I know what I'm doing, you know.
Right?
Now, I kind of laugh at it because I know what I'm doing. And unless I totally screwed up and pulled ridiculous comps, which I won't, but let's say I did, then yeah, there's room for me to go back and correct. I would say maybe 1 out of, 1 out of 20 challenges, let's say, that actually they wanted a reconsideration of value. Maybe 1 out of those would change the value. And it typically won't even go as high as they think it is, but it'll get it closer.
So what, you have a story that maybe you can go back to, or maybe just a situation that you can go back to? Because look, people want to look at the fact that, well, why is this value? It's always the solds, and everybody doesn't understand. Can you explain why there's a misconception that they think that value should be higher when you prove them otherwise? Because there's a lot of people that think, well, you know, you're looking at this house, I got all these comps, this is what's sold. But again, there's other factors to looking at a house. Yeah. It's not just, well, I got these documents. What do you have to go through to
Well, our process basically is we compared interiors, photos of interiors of the homes to the subject.
Right.
And that's how we can make condition adjustments and so forth. So there's typically nothing that somebody can provide after the fact that's going to change all of that. Typically, there's nothing.
Yeah.
Okay. Because if I do my job as an appraiser,
so there's nothing you can do after it's already been.
I'd say this.
No,
I'd say the way to look at this is when he does his job, there's nothing because he looks at everything. Yeah. But occasionally, an appraiser will miss something.
Absolutely.
Yeah.
What is that thing that they miss?
They miss something that they should have looked at, and it was appraiser error. And if you catch an error because they didn't look at an asset that's recorded or is valid, like a valid comparable,
sure.
then, and I don't appeal this stuff.
Sure.
I have a girl that I know that used to be an appraiser, and if I have a problem, I have her look at it because she's done more appraisals, and I have an idea of what the appraiser's looking for, but like I'm biased because I'm the agent in the transaction. I'll give it to her and I'll say, hey, what do you think of this? And if there's been an error by the appraiser and you catch it, and then you've got to communicate like in a really cool fashion to the appraiser, because they don't like to be told that you missed something. Yeah, right. But it's possible, but
it's possible.
It's very rare.
Right.
It's very rare.
Exactly. I
It's
mean,
very
we're all
rare.
human.
It's very rare.
But I've had situations where the homeowner's wife actually communicated with me, and she said something like, "We have what did she say? Not tornado-proof, but some kind of storm-proof garage doors."
Yeah.
And I didn't take that into consideration. I thought, are you serious? You just said this?
Yeah.
I mean, you hear stupidity from just about everybody.
But I think it comes down to relationship, or almost like that camaraderie.
Yeah.
That you may have an influence a little bit more in the situation, you know, because, for instance, we know that people that they say, well, if you write a contract, and let's say that these contracts, when you write them and you go out and you see that, let's say that you present it, that if they have some type of thing behind it where it's like, hey, I need this because my family, we have 5 kids and we don't have a place to go, and there's really like a big motivation behind it versus somebody else that maybe not need it in dire need of it. Does that really play a part? No. Especially with the appraisers?
No, absolutely not. And that conversation should not even come up. I've heard of situations where the homeowner either jokingly or seriously said, this is what we're looking for the value. They've walked out.
Oh.
They just literally walked out.
They said,
they just not even happening.
Yeah, you can't do that. That's illegal.
I mean, I've done that a lot. and then so
You did what? Tell me
say, I think I say like you go meet the appraiser. Because this is what I do for my sellers. Like if there's a contentious appraisal issue, I'll have my seller, because the sellers, if the home appraises and it's done, it's in the best interest of all parties.
Sure.
So I will shut the house down, like restrict access, and then say the appraiser has to call me and make an appointment with me. Then I'll go meet him.
So look, it sounds like there's tactics, right?
There's
a
tactics
tactic
for sure.
here, tactic to how to do all this, right?
No,
it's strategic.
Yeah, let me tell you like a
yeah.
realtor tactic. You shut the house down, right?
Is this
you
from
say
SHIELD Team 6?
Yeah. You shut the house down, you restrict access, you tell them they have to call for an appointment, and you say that there's an alarm. And then you go meet them there. And then I tell my seller to itemize everything, but like be realistic, because I've had sellers just make up random fictitious things, and I'm like, no, we can't show that. That's
like
stupid. Like, oh, there was a $10,000 like thingamajig.
Right.
And so,
I know those thingamajigs.
Hey, I get those lists
that
all the
looks
time.
stupid. Yeah. Of course you do.
Especially when they've renovated the house. They've got every single thing itemized there,
And they've added it.
including the clean out.
Yeah.
Yeah.
Okay,
So-
how does that add value to
No,
this?
so there's the thing. So you got to shepherd the situation, but it can help. Sometimes it's
Yeah.
I think it's work where you have a friendly banter with the
Right.
appraiser, then you say
Yeah.
I think we're friends now.
Yeah.
And then I'm like,
You
it
just
feels
show
like
up
we're
with
friends.
a gift card, right?
Yeah.
I'm like, that's
So,
just
so I had an appraisal this week. So I think I've got a good appraiser because he's been really working hard to like find extra value.
yeah.
And I got him. There's 10 homes in this neighborhood. I've got 2 listings in there. One's in contract, and then there's one last house being built that's semi-custom. And I was surprised. The appraiser said, "Do you know what's going on with that house?" And I got the information of that person building the house. And I was surprised that the appraiser did that, because I already expected the appraisal to come in low based off the comms. And I already told my client, go off the square footage of this house that closed, and then go off, because the house that I'm selling is a comp because it was sold for 1.125 in Feb, and now it's in contract for 1.2.
Yeah.
That's a hard fucking. When your
No,
own
it
house
is.
is
Yeah,
a
but
hard
you can
comp.
use-
I will
the
not
F word.
I will not use the subject as a comp.
Oh, okay.
That happened to me. And
You don't do the subject as a comp.
No, because this is what happened. This was the beginning of the year.
Yeah.
The guy bought this house, and 30 days later he decided he wants to sell it. Okay, this was in an age-restricted community. All right, and he listed it like 30, 40,000 higher. I don't remember the numbers now. Okay, and the agent basically said, "Well, why can't you use that comp?" Well, because you overpaid for that house, and I'm not going to use a comp that was artificially
But
created.
it closed.
It did
Yeah.
close.
So that's a comp.
How's
But
that
I had plenty
overpaying?
of comps that didn't support what he paid for the house.
But did he pay cash?
I don't remember.
I
that.
know.
Yeah.
But if it closes, it's a comp, right?
Yeah, but that's a thin line, though. That when it is a comp if it
Yeah.
wasn't the subject.
But doesn't
Right,
it have to be?
okay,
It has to be
okay,
like
yeah,
my.
yeah.
It has to be
Yeah,
like
yeah.
the property that was same amenities or same things.
Yeah.
You're right. You're
Oh,
right
and
on
the thing,
that.
the thing of it for
Yeah.
this property was all of my comps were on the same street. Luckily,
Okay.
they were all backing up to the same power lines.
How far out do you go on a comp? Like,
Well,
like
Fannie Mae-
normally? What's,
Fannie Mae is 1 mile, but that's not written in stone. You can exceed the 1 mile if you can't.
what
find
about
comps.
time frame? How far do you go back?
Again, 6 months for Fannie Mae. When the market is hot, they want you to use less, like maybe 3 months.
Okay, so if the market's just
Yeah.
popping, then you just
Right.
like, hey, but what if you don't have? Obviously, if you don't have the
If you don't-
properties, then you got to even
if
go
you
out
don't
further
have
than
it-
a mile.
Yes, you go further than a mile. You can also go up to 6 months or even further if you have to.
What's
But
the
then,
furthest you've gone out to comp a
mile-wise,
property?
2 miles.
Okay,
2
so
miles, 3 miles. It just depends on what type of property. If it's a cookie cutter home, obviously you're not going to go 3 miles. You'll find comps.
yeah.
What
Okay.
does 2 things affect when you look at to do an appraisal? 2 items. One, when you look at the contract, if there's no appraisal contingency on the contract, does that affect your thinking in any way?
No, not at all.
Okay. And
Not
then the
at
other
all.
question is, if they're putting more cash down, does that affect your thinking?
Irrelevant. It's
You don't even
irrelevant.
like you don't get a bit more loose.
No, it's totally irrelevant.
Andy,
Okay.
do you get loose, man? We want to know.
But not on an appraisal. I'm in the bar, baby.
I don't think you can do that because then, let's say you do get quote unquote loose on a transaction, that's going to be a comp for somebody else. So you're doing a disservice
Absolutely,
to somebody
and
else
it's-
who's going to use that comp
Yeah,
3
and
months
it's
down
not
the
in
line.
anybody's interest because our main thing is to protect the lender and everybody else down the road. You know, I didn't really want to cut in earlier when you guys were talking about values going up and down, but one thought I had is, okay, let's say somebody paid 20, 30,000 higher today. Inflation has been going up. Everybody's downplaying this. I was watching the news this morning, and luckily they had this part of it in there.
No, inflation's a real problem.
Okay,
Yeah.
here's
Yeah.
what they're
I went to
saying.
the supermarket last night. It was out of control.
Yeah, here's what they said. They had a picture of pork chops,
Yeah.
and they said pork has gone up 4.6%. Gas has gone up like 6% or whatever it is they
Wow.
said.
Gas has been ridiculous.
Oh, gas
Yeah.
has gone up 60%. There's
It's
an arco
gotten
I
to the
drive by every
point-
morning, and I looked at the prices before our current president took office. I'm not blaming him, but I'm just saying that was my time frame that I'm using. And what that same price is today, it's about 60% higher.
Wow.
Pork, for example, went to Sam's Club last weekend. We buy spare ribs. Okay.
Okay.
They used to be $2.99 a pound. Now they were $5.99 a pound. That's double. That's not
Wow.
4.6%.
Now, let me say this, and I'm not, but we can go back to that. Truck drivers, right?
Yeah.
Okay. There's not a lot of deliveries.
Right.
Same thing with gas. We can talk about that big problem that's going on.
Sure.
Is that in contribution to why you think that's happening?
Absolutely, because everything is trucked in. So when gas prices go up, that delivery price is going to go up. Then the supermarket is going to increase their price. Then they have to account for their profit margin. So it's not just 4%. It's a lot higher when things start going down.
Yeah.
So what I'm getting at with this is when inflation goes sky high the way it's going, it's going to affect people's affordability.
100%.
Down the road, when they decide to sell that house and demand has already gone down, and property values are only going up like 4-6%, whatever you guys mentioned earlier. So now they want to sell this house and they can't sell it for what they paid for it.
Sure.
Never mind the closing costs they're gonna have to pay. So that's where the crash is gonna happen, in my opinion.
Yeah.
It's not gonna be the same crash that was caused by the financial institutions.
Sure.
And that was my point as far
Yeah.
as.
Well,
But
Oh,
the
so-
a crash will happen. I guarantee
know
you.
what?
It always happens.
Yeah.
I'm sorry.
It's
you-
part of a capitalistic.
Right.
Yeah.
Right.
So
System.
that's a
Right.
good point you bring up, because if it's so expensive to live, to like eat
Right.
and
yeah.
move around,
Sure.
then that's gonna, was it a third of your income can go towards your mortgage payment?
Yeah. What? No.
What is it? A third?
Well, it
What's
depends.
what
you
is
can
it?
It's
you can have
28.
it up to 45% of your total income, right?
To the mortgage payment.
But you can actually exceed it if you have compensating factors to 50. I've seen FHA loans, which we don't do a lot of them because
Yeah.
the
we can't
cap
get
on
the
the
contracts.
well, it's
Right.
the contracts.
What's the cap on that? 376.
No, it's 362, 250.
362.
Yeah, so because of that price point, we don't see a lot of FHA buyers. It doesn't mean they're not out there.
Right.
Yeah.
It's just they're just starting to get pushed out and squeezed
Yeah.
out of the market.
Well, as a lender, do you think that inflation is going to increase debt, which would have a bad effect on back-end ratios for closing?
Absolutely.
Yeah.
Absolutely.
Yeah.
It's,
If I
gonna,
can
it's definitely
barely
going to do
afford
it.
now, and then prices go up.
Yeah.
Then I'm going to have to take on some kind of debt.
Yeah.
There's no
Right.
doubt about
That's a
it.
very good analogy
And
of
then
that.
Sure.
I can't close it. Now, with gas prices, I was in San Diego last week. This has never happened to me before. I put gas in my car to drive back home,
Yeah.
and it stopped at $85. And I'm like, what the hell? Because my debit card, when you do it, has an authorization limit for $85.
I see.
And I pulled
Oh,
out
wow.
and I said, okay, $85. And then I got in my car, had 7/8 of a tank.
Wow. Yeah.
So
Wow.
It cut me off. I've never had that happen
Well,
before.
there's a gas station that I buy gas from. It cuts you off with $50, and it's not
Can I-
my card because I use the same card at different gas stations, and it goes up as high as you want. But that gas station put a limit on it for
Wow.
$50.
Yeah, but still, I was like $85.
Yeah,
I was like, it was
Gas
about-
was like over $5 in
yeah,
California.
for the premium, it was $5.95.
Yeah, there you go.
Can I tell you a secret, gentlemen, how to beat inflation and feed your family? Go to In-N-Out.
I think I brought that up before, haven't I
Yeah.
not? Like the
Dude,
prices never
There's
change.
no inflation at In-N-Out.
I think you all
He didn't
stock in
steal
that
your
company.
thunder, did he?
Yeah, I know.
I can still feed. I can still feed my family for $20. And-
Well,
and
listen.
it's really
Well,
good.
and this is
It's always been $20.
There you go.
Do you think that are those prices though increasing or going to increase too? They probably will, right? I mean, if you got truck drivers that are not, I'm sure they got things in place. But
Yeah.
that could, if that food's going to go up, food's going to go up. I can't see why fast food wouldn't go up too. But going back to the housing, let's go back to the housing situation here. So the demographics we see is home affordability is obviously getting tougher for families. They're getting tougher for people that are out there buying. Do you think that when you look at Las Vegas right now, everybody doesn't talk about internally about what's happening in Las Vegas. They don't talk about how people maybe still are not back to work, or is it harder for the maybe the Las Vegas, I don't know, so we'll say Las Vegans or a family here that's living here or somebody that is already been established here to actually buy a home, because everybody's out, all these outside buyers, out of state buyers, they're pushing this market, and it's pushing them out of the market too. It's not just first time home buyers. Maybe it's just Las Vegans in general. Maybe the cost, they can't just afford it. I mean, because a lot of these people that are coming from out of state, they're putting a huge down payment.
Sure.
So these average homes that are 400,000, 450, even though they're starting to open up, existing homes are still not, there's not enough, I think. And then the question I always get is, well, if we did, let's say I do own a property here. Let's say I bought, I did my thing and I did it 5-7 years ago. Where do I go after that? Where do I end up after that? And I think that's the biggest problem is
Sure.
It's not about just selling.
Right. Yeah.
It's also, what am I buying into after that?
You can't. Now,
Well-
I'm in the same situation. We're trying to downsize, and for the price that I possibly could get for my house, I can buy half the
Can't go
house for
anywhere.
more.
Yeah.
So why would I even want to do that?
So are you stuck in your house?
You are.
Yeah.
Basically,
Right
I
now,
mean, are you house
I have-
hostage?
Yep.
I have some people, I sold them, they paid high when they got it, but it was fully furnished and it was an amazing home, and they paid cash. And now the house has gone up from like 700,000 up to like $1 million.
Yeah.
They probably paid about 100 grand too much for the house when they bought it, but it was fully furnished with like good stuff, like Peter Lick art.
Yeah.
Like it was like, here's your house. And so now I can't get them anything. I can't get them
Yeah, and I
anything.
think you got a lot of clients.
like-
Sure.
Yeah, there's a lot of people that are like, I want to buy, and you probably got a long list of people that are sitting
Yeah.
on the sidelines that are probably looking to buy a home, and now they're in a waiting game.
So I think that if you're prepared to like shift your lifestyle like radically,
Yeah.
then you can downsize. But like when you downsize, you're not getting, you can't get half the house for half the amount of money. You get
Yeah.
like half the house
For
for like
double the amount.
3/4
Yeah, or 3/4
of
yeah.
what you
Right.
had.
Yeah.
Exactly.
You know,
right.
so there's that sometimes it's not, unless you change lifestyle and go into like, when I say change lifestyle, go to like
Like
high
Chippendales or no?
no,
Yeah,
It's
right.
like-
something like that. I've been trying to put people into high rise,
Oh,
just from having a big house to going to a high rise, and say, look, you got a new lifestyle, you don't have any hassle, but the thing is with the high rise is the condo association
Oh, yeah,
management
it's
fee is
horrendous.
high,
yeah.
Right.
Yeah.
high.
And you can't finance that because if I'm paying an extra $900 a month in HOA,
Sure.
that's going to go into the mortgage
Yes.
aspect of it, and I'm going to get blown out of the water.
Right.
That's a
So
good point,
it's tricky.
Scott.
You
Yeah.
got litigation.
Yeah.
Litigation's a problem as far as if it's in litigation, they won't finance it.
100%.
So you have to come in with cash a lot of times on those, or very heavy cash.
Yeah,
So yeah, that's
you're
a problem.
great point.
Yeah.
Very good point.
But I mean, I think what would be more interesting is, you're an attorney, right? Is there anyone we can find you to sue?
Oh yeah, you got a list?
Like,
Hey,
there's
did you see his eyes light up?
Boom, let's
Wait
do
a
it.
second. I was asleep over here.
Who do we got?
I want to ask the appraiser. We got a couple of questions for
Okay,
you,
sure.
Andy. So one of the questions we have, the first one is, let's look at this. How far distance-wise and how far back for VA loans? I think he's saying how far out for appraising these properties and how far back do you go?
Okay, first of all, I do not do VA loans because I'm not on their list.
Okay, so you got to be a VA appraiser on the list.
Absolutely,
Okay.
yes. And I've said this before, 10, 15 years ago, I went to a trade show and they had their booth there and they said, are you signed up with us? And I said, no. They said, oh, you should. So I filled out the application and I'm still waiting to hear back from them. So that was the end of that. But for Fannie Mae, it's this, their guideline is 1 mile, up to 1 mile,
Yeah.
and up to 6 months on time.
I see.
And like I mentioned before, we can exceed those, providing there's no other comps.
Right.
So yeah.
Here's the other question. The other question is, Can you ask the appraiser if appraisal fees have gone up? Have they gone up?
Yes, some have not.
Why is that? Why is it sometimes, and I get this a lot too, and this is a good question by running the altitude, is why do some of these fees go up based on property or based upon location or scope of work? Is that typically like
No, it should not have.
How does that
anything to
change
do-
then? Why does some properties have a higher value?
It's not the higher fee. The fees are set up by either the AMC, the appraisal management company, or if it's a direct lender, it's the lender themselves. Some companies are still stuck back in the early 2000s as far as their fees go.
Yeah.
Some companies, they have smart managers, and what they did is one particular company, I won't mention their name, they increased their fees considerably a while back. And what they did effectively is they made sure they have good appraisers on their staff, not staff, but on their list. And, they're not going to go away. They're not going to turn down work because of low fees. Other people stayed below, and guess what's going to happen? And this is strictly a business point of view, okay? You only have so many hours per day or per week. And if somebody's paying you X and somebody's paying you X times 1.5 or
You're
whatever,
gonna take
you're
the
going
latter.
to take that because that you're filling your time with lower fees. It's not being greedy. This is a business decision.
Everybody would do it. I mean,
Absolutely.
Let's not lie. I mean, if you're running a business, you're going to do it.
I've got
time's money.
I've got one company that I work with, and they're still a little bit lower. They're acceptable, but they're on the very low end of things. But they're such a good company to work for that I still take business from them.
Yeah.
So
explain what an appraisal management company is and how does that work?
Back in 2009, when the appraisers got blamed for the crash, they said you guys are cheating. You guys did bad appraisals. This is what caused it. So now lenders can no longer directly order appraisals from us. So they created these independent companies called AMCs, appraisal management companies. So if, for example, I'm just going to throw out a number. Let's say typical appraisal was $100.
Yeah.
Now they're charging maybe $110, $120 to the borrower, but they're only paying the appraiser, let's say, 75 or 80.
So what is the benefit of that then?
There is no benefit.
Okay.
Absolutely none.
So then why have them, I guess, is the question.
Because we got blamed for the crash.
That's what it is.
Yeah.
Everybody's always like, why do you have an appraisal manager? Yeah.
And Andrew Cuomo was the author of this. So
Really?
yeah.
Yeah.
But is it true? Do you drive a Porsche?
Yeah, but I was driving a Jaguar.
Did you see that pause? He was like, wait a second.
Yeah.
Am I set up
Did
here?
you get that Porsche in the last crash?
When I was a realtor, I was driving a Jag. So
Don't drive a Jag.
Yeah.
They're terrible.
That's funny. Did you see it? He was like,
what?
you're on to me.
But yeah, so that's basically what
I clock everything.
All right, we got another couple of questions here.
I like fast cars.
Yeah. So let's talk about this one. So we got another person here, Beth. She asked the question here about, and this is a good question. How do you appraise a new home in a new community? And that's what she wanted to know. So, because look, a lot of these new homes that come back right now, not a lot, but some are coming in less than what they're actually written for, the contract. And I'm curious how that actually works out because you go in the past, majority of the time it didn't happen that way.
No. Here's what's been happening with new homes. Most of the times I would use 3 of their own comps that they've sold.
Okay.
And obviously I would ask for a couple of pending sales.
Sure.
And typically there's no issue with that. They do have those. What I would also do is try to go outside of the community or try to find, even in the same community, a resale home, if at all possible. Okay?
Yeah.
So that's the first scenario. This is the beginning of it. The second part of that is I do get a list of, I get the contracts from the builder, which also has all of the options, the lot premiums, and so forth.
Sure.
So let's say the subject property had a $10,000 lot premium, and my next comp had a $15,000 lot premium. So that comp gets adjusted minus $5,000. So now the comp and the subject both have the exact same lot premium, right?
Yeah.
10,000. I do the same thing for their options. Subject has $30,000 worth of options. Comp number 1 has 20,000. So comp number 1 gets adjusted up $10,000. So now those two properties are equal,
I see.
and so forth and so on. This is how you make your adjustments.
So if there's no adjustments to be made on some of these properties, that's where the problem falls a lot, right?
Usually there is. Usually there is lot premium, definitely, and also upgrades.
Yeah.
So those are easy to adjust and they're justifiable.
Do you adjust the upgrades for their dollar value on the contract?
Absolutely, yeah. That's how you have to go by. There's no other way to do it.
So then that's part of the reason why a new home will always appraise, because you take the dollar value of what the client paid for the upgrades,
Right.
and you assign that to the value of the house.
Right,
like
but then
straight.
you make your adjustments on the comparables to make them equal.
You don't take
So-
off like 20% of the upgrade value for say
Oh,
Toll,
absolutely not. They're
for
brand
Toll
new.
Brothers
Well,
because they charge more.
yeah, but again,
You
all
know?
of my comps are Toll Brothers too. I'm not
Yeah,
using
so
KB homes.
that's why a new
So-
home,
so- so
a
I-
new home
yeah.
99.9% of the time appraises.
It does. Absolutely.
It's just a thing.
right.
Here's
Yeah.
my
You
thing
know?
though, is I've had appraisals come in where they were $20,000-$30,000 less. How does that happen
On
with
a
a
new
new
home?
on a new home? This has
I've
happened.
never-
I've had one that came in 10,000. Why is that happening?
Because of the
I
lot
don't
premium,
know. I can't really tell.
maybe.
I don't know what type
Yeah,
of
yeah.
adjustments.
What would be a common situation where why that would happen? Though, why would something like that actually?
Hypothetically.
Yeah, hypothetically,
Okay.
what can people say? Well, could this happen to me? Because we all know that a lot of people are into new homes right now. So
Sometimes it does happen, but the difference is not very large. This has only happened to me once in my entire career. It was a townhome that it actually did not come in at what they were
Oh.
selling them before.
Yeah,
Brand new.
one more thing is there's more likelihood from the builder perspective if the house doesn't appraise that the builder's going to address that.
Yes.
Like because
Right.
they're going to have an appraisal issue regardless unless they find another buyer.
Right.
So,
it happened to me, and they didn't
was
even address it.
They canceled the contract.
No, they didn't cancel it. The buyer had to pay above.
Did they tell
above
them they had to pay?
appraised value. Yeah, because the builder has these contracts,
did-
as you know, they're all
but
based
did
upon
the buyer-
builder benefit.
But there's still an appraisal contingency in that contract.
Well, there is, but they're not going to go to bat and say, "Well, we can't justify," because even if you send in comps, what are you going to send in? Like, what's
yeah, and
the
a lot of time buyers that have waited 6 or
Yeah.
9 months for a house, they're set on that house.
Yeah, definitely.
Well,
you know?
we actually
Yeah.
challenged it. We actually had a situation where the appraisal came in $30,000 less, and we challenged it. And then the appraiser's like, "No." We
Okay.
actually,
So
because
what
we were
did-
like,
what did-
maybe they didn't.
What did
see.
your client do?
Well, they ended up paying the difference
Because they could.
because
Right.
fortunately
had
they
to.
could.
Well,
Yeah, but
yeah.
if they didn't,
Well, how
then,
much was the listing price?
the listing price? I believe was $530 with upgrades, everything with upgrades, and I think the appraisal came back at $500.
Okay.
So it was like 30,000.
unfortunate.
Yeah, it was like 30,000 different, and it was. Does it happen all the time? No, it does not happen all the time, but it does happen, and it's.
Right.
I'm curious to see how something like that would happen, and how somebody would. What are their options? I guess
It
right.
could. I mean, it could happen because what happens is, let's say they sold these comps that they gave me, these 3 comps they gave me. They wrote the contract 6 months ago, for example, right? It took 6 months to build the house. In the meantime, home prices went up. So now that the home prices went up, maybe this buyer didn't put as much upgrades in it.
Sure.
So this is where I can see a problem could occur.
Well,
I mean,
go ahead.
So,
oh no,
Go ahead.
I was just going to clarify on that between the. But I just lost my thought.
Okay.
Between the.
let's say they paid $400,000 for the house when they signed up, okay, with $30,000 worth of upgrades.
Yeah.
Now that same home 6-7 months later is now selling for maybe $500,000. So this buyer didn't put $30,000 in upgrades. Maybe they only went up 10.
But don't you think that the properties with the appreciation and home selling, because you know that there's other properties, you said in that community
Right.
or in that location, they're probably selling for, because there was a couple of properties in that location that sold above the final price. I think it was like, they had it like at 537 and 540. So there were some, and then we said, well, there's 2 properties that sold in that area for that amount. Why would you not adjust up for that and say, you know what, hey, you're right?
Did the appraiser use those comps or no?
They apparently they didn't, and that's I'm assuming they didn't because they appraised the property months, like a month before, or maybe a month and a half before, and then when we went back to justify, said, hey, you know what? There's other properties here that have sold above
This
with
was
the
a brand
upgrade.
new home?
Yeah,
So why didn't the builder give them that comp?
I don't know, and
Because it
we even
doesn't
brought
make
it.
sense.
Well, we even brought it. I even brought it to the builder's attention, and they didn't really go into depth on trying to challenge it. And we got back to the appraiser. The appraiser's like, we're not going to adjust it. We sent in, we had a reconsideration of value. It was sent in, nothing. And it's fortunate that these people had the ability to come in out of pocket above price, or else guess what? They'd be walking.
Right, right. Yeah.
You know?
So guys,
But sometimes you have to threaten to walk
Yeah.
to get a negotiation, because if you'd have played the game of, now we're cancelling,
Yeah.
then send the paperwork, or we meet you in the middle, like you could say that, and maybe they would say okay, or maybe that your client still would have paid the 30K.
You
that they
imagine
did.
being that client, waiting 7, 8, 9
Oh, it's
months.
horrible.
Well,
and then,
You've
and then
already
now you
made
got to go
plans
to,
and everything.
yeah.
So.
Then you got to go to bat afterwards. As
Yeah,
far as
I'm kind of ignorant here. Let me explain it just layman terms. You're talking about buying a new construction house, right? And then you're
Right.
saying their appraisal is what will be the purchase price in the contract initially.
No. They come up to an agreement, or what they're saying. Okay, our house is worth 400,000.
Okay.
Then they go
But for
and
new
add,
construction.
yeah,
right?
brand new construction.
Okay.
You know, they have a pamphlet that tells you what the prices are.
Okay, gotcha.
You choose this model. This is how much it is. Then you go and choose all your options and stuff. Then they tack on a lot premium for nothing.
Right.
Okay. So then you have a final price.
And that's the contract.
That's the contract.
So when's the
price.
appraisal come into play?
The appraisal will come in when they apply for a mortgage loan.
right.
So
Oh,
the
okay.
mortgage company will hire us.
That's
and we'll
right.
Go
That's
out
right.
And do the
That's
appraisal.
right. That's
30
right. So,
days before they close.
Oh no,
45.
it could happen much earlier than that.
It all depends on the builder. The builder's
Okay.
the one that dictates
Yeah.
the whole
But
process
when
and
the
how it
house is
goes.
finished,
No, as long as there's the 2x4s are up, I can
Okay.
go do the.
But
appraisal.
it does have to be finished when it's like at the end to
I
get
have
that
to do
final
a final,
inspection.
absolutely,
Yeah,
yes.
Do you go dollar for dollar on those lot premiums when you're doing
Yes.
comps?
Yeah.
Because I've
That's
seen,
actually a question.
because I've
Dollar for
seen-
dollar.
That,
Yeah,
like I
I've
explained
seen some-
earlier, if the subject paid 15,000 for a lot premium, and the comp paid 10, the comp would get adjusted upwards by $5,000. So now they're both the same. So it is dollar for dollar.
That's amazing, right? So
do you know what I think? I've
So-
just come up with a solution for all of this.
you got a
Yeah.
solution? Let's
Yeah.
hear it.
In and Out should go to the government and say we're going to become a home builder.
That's how you fix it?
Yeah.
this is a good man here. Referencing in and out.
Keep in
out.
mind,
So
In and Out only makes 3 products.
Yeah. Keep things level. What is it? What is it for double?
I don't know.
Double, double?
I think it's like 620. Yeah, number
Do,
one.
do,
double,
do, you,
double.
do you do animal style or you do it with bread?
Absolutely. No, animal
Some
style
guys-
has
protein
bread.
style. Protein style or you do it with
Protein
bread?
style.
You know, I've done protein style. I've done animal
You
style.
go
I've done the
through
grilled
phases.
onions.
Yeah.
So you do everything pretty much, right?
You
go in
know,
there?
I think about it. I do.
I don't think there's
Yeah.
one thing at In and Out that I can say that I was ever disappointed with.
Well,
I'll
there's
be
only
honest.
3 items. They're both the same. They're just
Exactly.
different sides.
That's
Yeah.
exactly why I'm not disappointed.
I would say the fries. The fries are mediocre,
Yeah.
in my opinion. But
Me
the
too,
burger
I agree.
is the best thing. All right, so we'll have. But back to the appraisal. I'm sorry. So when
I must have In and Out on the brain. Sorry.
Hey man, you're going right afterwards. I can see it. He's going to start his truck from his phone. We're going to see him.
yeah, where's the
I'm
closest
out.
one? So the appraisal. So we're talking about comps to figure out the appraisal, right? And you're saying you can't do it with new construction because obviously you haven't been sold, right? 6 months later, their price goes up for the homes or whatnot. When are they applying for the mortgage though? At the end or?
Oh no, the mortgage is probably applied for right after they do the contract.
Because the builder needs to verify.
Yeah.
Okay, so usually the builder
That's what I thought.
has to verify that you can afford the house.
Right. I think
Yeah.
they have a contingency where it says
Yes. So,
X amount of days you have to apply for a loan.
so if it goes up by
With the builder's lender.
yeah, but so if the value goes up whatever it does in 8 months, why does that matter if you're already approved for the mortgage, the price has been set out?
because I don't go in the beginning. I go pretty much. Well, even if I go in the beginning, okay, the beginning of our subject property is now versus the comps we're using that maybe went to contract 6 months ago.
Let's say that one more time.
Okay.
The beginning of what?
The beginning of construction
Right.
is pretty much when the appraiser goes out.
Right.
Because assuming that they wrote the contract and within 30 days they applied for a mortgage loan, okay? I get called, I go out there, maybe we're in 30, 40 days in the process. Right now, they'll probably only have the concrete and maybe 2x4s up.
Right.
So I would go do the appraisal, and it's based on the comps the builder gives me that day. Now, those comps, those properties were probably written 6-7 months ago,
Okay.
okay?
I got you.
But then we also ask them for 2 pending sales, which shows me what's going on right now. Because those pending sales are pretty much written within the last couple of months at the most.
Right. Similar to what you're doing the appraisal for in
Right.
that situation.
Right.
So it should be similar, though, is what I.
Right.
but
Right. So that shows us the
That'd be an
timeline of
odd
what's going on.
situation for it to be
Like
spike
I said,
high.
I've
Like-
pretty much never had a situation where the builder's home did not appraise.
Okay.
It
gotcha.
does happen, but it's not very
Very rare.
often. Or you might be short maybe $5,000-$10,000. Which
Now, if this scenario, let's say you started that, right? You go out there, and in the meantime, like 10 days earlier, the lot across realized an In-N-Out just purchased that and is starting to construct an In-N-Out. How does that? Still got to shoot it through the roof, right?
maybe not.
It's not a serious question. I'm sorry.
So I got a question here that's a different question that I don't think I've ever seen. So they're saying Ver's on. So thanks for being on here, Ver. Shout out to CC. Just want to show you a shout out. Also running at Altitude with shooting out, giving you a shout out because you guys are always on here. But one of the things is Ver was asking a question. Do you think appraisals will go away from physical to some sort of software to evaluate? So meaning like is the software?
Good question.
Okay, that technology exists today, and Fannie Mae does use it.
Yeah.
But that does not preclude them from ordering appraisals. Now, there are cases where appraisals are waived by the lender. If you've got
There's
a
a
very
substantial down
very
payment.
strong borrower, large down payment, sometimes they will waive it.
That just happened to me with Wells Fargo. They waived my.
Yeah, but my question is this: when you guys go to
So, I
Go ahead.
want to say something about that. When that's happened, and then I tell my buyers, if I'm representing the buyer, that it happened, we could be done here, or if you want to spend like $550, $600, if it comes in lighter, we could run some game on the seller and try and create value.
Yeah.
But you need to decide if that's worth 500 or 600, or if you want to close in 2 weeks,
Yeah.
or if you want to have a song and dance with the seller.
Yeah.
But if the house appraises for higher, we won't tell the seller that it appraised for higher, and we'll just continue along the way. So I say to my clients, do you want to not spend 550, 600 and just close? Or do you want to spend the 600 and know that you don't necessarily have to? And if it does appraise lower, you may not get anything from the seller, but it's just part of the game.
Well, there's
you
a
know?
situation like this. I do refis, and obviously we do existing homes, and they have an automated value that comes through. And if you can, sometimes on some properties you get it, and they're like, well, why wouldn't I ever use that all the time? And it's like, well, maybe you can use it sometimes, but go ahead. What were you gonna say?
But when you start doing that stuff, that's when, like, there becomes, if you just relied on a piece of software, like Zillow has got very good historical data, but like for current data, it can be quite off. And so if we just use an algorithm all the time, then there would be more like errors.
well,
Because you need
Just to add to
the
that.
human big brain
Well,
to look at it.
you need-
Zillow is
yeah.
very very inaccurate though.
You talking about like getting his estimate?
Yeah, very inaccurate.
Do you use estimate?
No, well here's the deal. Okay, we all live in subdivisions, right?
Right.
Okay, in a subdivision, you have single-story homes, two-story homes, homes with pools, home without pools, 4 bedrooms, 10 bedrooms, whatever the case might be.
Yeah.
Zillow doesn't look at any of that. Zillow, and the square footage especially, you might have a 1,600 square foot home and a 2,500 square foot home in the same area. So Zillow just takes that whole circle of homes there and says this is an average.
I see.
No adjustments were
Yeah,
done.
yeah.
So how's that even close to being
No,
accurate?
I
it's
have
not.
noticed though, and I look at Zillow though, you can see when like a sale goes through, right? And at least recently, it seems to me that it'll say like, "Oh, it's appraised at this by Zillow," and then June, whatever that was sold, it's been within like 5 to 10,000. Seems kind of.
I don't know
because I would have
what
to check
basis
it.
they're using because they're not making adjustments of any kind.
Right.
So maybe they're taking an appraised value, and
Well, maybe for
again,
the
I don't know.
maybe for the cookie
Well, I
cutter
would
homes,
say
it's
this.
more
I
accurate
think
than-
it's not fair to say that. I think that there's programmed adjustments based on square footage and bedrooms,
Yeah.
but the algorithm, which is a computer program or code, is not looking at the difference in the quality of the finishes
Yeah.
or stuff like that.
Yeah, a lot
know?
of people are redoing their kitchens and bathrooms,
Yeah.
and
Right.
they're
It
not going to adjust. for that.
The Zillow algorithm doesn't compare a new kitchen to the
No,
old
they
kitchen
can't.
with pine
There's no
cabinets.
way they can have. it.
It's a bit too much.
Yeah, but that'd be hard for people though, right?
Yeah.
Because maybe that's
But-
important
but-
to me.
But Zillow's an important piece of information for consumers,
Yeah.
and
it's a starting point.
It's an
Could
important
be,
piece of
yeah.
information that's a topic of conversation, but it's usually like sometimes it's bang on, and sometimes like it causes like an opportunity for somebody.
I guess I think the question though, because I kind of with like the attorney world, I think about this a lot. 10, 20 years from now, where are these programs at then?
Yeah,
And how advanced can they be?
It's going to continue to advance for sure.
Right.
Well, one thing that's going to happen before any of that happens is they're probably going to run out of appraisers. Because when an appraiser retires, another one doesn't replace them.
Is it because the job is getting so scrutinized? Is this just not a
Not
desirable
only
type of
that,
position?
but you
It's
have
not
to
sexy.
You have to intern for 2 years.
The Porsche.
He's got a Porsche though,
Yeah,
man. You know? You're driving a
He's
Porsche.
making it
come on.
sexy.
I'm a model here. No,
It's a classic though, isn't it?
yeah.
Yeah. So
No, it's not a classic.
It's not like
yet.
It's not. How old is it? What year is it?
10.
Yeah. Looks classic.
Yeah. So you have to intern for 2 years. Not a lot of people are willing to do a 2-year internship without getting paid or getting paid.
It's almost
very
like
well.
going to college now, right?
Oh, and you do have to have a college degree now, whereas before you didn't. Okay. Second, there's not a lot of appraisers that want to spend the time to have somebody intern with them
Yeah.
and then have them take their business when they leave after that.
Yeah, it's a lot of work.
Because in order for you to have an intern or even another appraiser, a licensed appraiser with you, you have to register them with the AMC or the lender you're working with. So what's to keep them from taking on your business and taking off? So a lot of people are not going to do that.
That's true.
I had an intern at one time, so I
Yeah.
gave my contribution. But what I'm saying is eventually this business will probably fade away.
Well, I think everything is going to get replaced at some
But
point
again,
down the road. You know, even lenders and I'm not saying that
realtors
the human element is still going to be there because people still want to deal with humans. But the efficiency and the software and everything connected, I would say 10 or 15 years, maybe 20 the most, that you're going to start to see a real automated system. You're still going to deal with people. You may even meet these people. It's probably going to still be a relationship business. But again, I think there's going to be a lot of things that's going to replace that.
Definitely.
You know.
I mean, in the future, this was years ago, they were talking that realtors are kind of going to die off. I was in real estate back then. And the thinking was people are going to start looking at homes online. And online was just beginning at that time. It wasn't even that popular yet. So why can't somebody go online, look at pictures and say, okay, I like that neighborhood. I like this house. I like the way what they did.
Well, here's where it comes in. And Matt can probably attest for this is likability. Right, you got to be likable. You're a likable guy.
No, I think it.
You
No,
know,
he gives
likability is
good lip
important.
service, he
well,
said.
let me say
Good
this
lip
because
Yeah.
when you look at making an offer, right? What if you got 15 offers on a
So-
house? How does somebody decide? Is it just hey, it's just because it's total amount of what I'm getting paid and that's it, and I'm out? Because you look at the real estate side of it, and I think there's a you got to know both sides. You got to have the listing.
I mean, the key
and
thing is you got to have like experience and knowledge, but you also have to be able to be a alchemist of the human element, you know, because there's a human element in the transaction.
That's right.
And the human element is the psychology of the buyers, if there's more than one, the seller, the listing agent, like, are they experienced? Are they not experienced? Is there pain in the seller?
Yeah.
Does the seller like your buyer? Does the seller like me?
Again, it's
Like,
likability.
there's
right?
so much different things that go on, but then that's how, you know. But like, you can't just like push a button at the moment and buy a house. There's too much going on.
Things were different.
But Zillow, I got headhunted for Zillow. It was like 3 years ago.
Do people actually question you though? Like, and I'm gonna put you on the spot. Look,
Can I tell you the Zillow thing first, right?
Tell me the Zillow.
I got headhunted by Zillow. Zillow's goal, like, I didn't take the job. They wanted me in charge of their flipping operation in town, and then I didn't take it. But their goal is eventually to to push a button and get your Zillow home.
Oh, just buy it. I mean,
Buy it on your phone.
they're kind of doing that already, but it's
not quite. They're going in that direction, and you know, they started off with Zillow offers, which is for their flipping. And by the way, if you sell your house to Zillow, you're paying the most expensive convenience fee in the country, like 20, 30K. Like, so, but their ultimate goal is to make a little slice of money on the home warranty they'll probably, I don't think they'll let them own an appraisal company, but Zillow would like those estimates be the appraisal function. Like there's a whole plan with them. So, you know, it's going to take time, probably take like a decade.
Probably.
But there'll still be a place for a good agent. Like, you know, like there's like how many agents are in town now? 20,000 agents?
I don't see agents going away just because.
No.
Because the transaction, I mean, buying something on Amazon is one thing, right? But buying a home, that's a pretty intimate thing that people do.
Yeah, so it's not
higher,
go
the
away.
higher the value of the home,
It's
the
not
more
going to
they
go
want
away,
that.
but it's going to be harder
butler
for some
service,
people.
basically.
Yeah, you're going to have to differentiate yourself, and you're going to have like a good client base that like will use you and no one else because you have a relationship with them.
Right.
Well, I was going to
But-
talk. Go ahead, Andy.
Just to add to that, appraisals are the same way. I just recently did one. It was a townhome in Inspirada. A certain company that they write their offers on the pad purchased the property and put it back on the market 30 days later for 70,000 more.
Wow.
I looked at the MLS pictures from before and now. Very little was done to the house. Maybe they were painted. I don't even remember if it was painted or not, but the property looked really nice. It was clean. So if you didn't get an appraisal, this person was going to pay so much more not knowing what was going on.
Right.
Same thing happens with cash deals.
Yeah, so I want to say this. You know, when you look at the human element, you're talking about, do you think a lot of people right now are looking at realtors? There's a lot of people that are going to take a discount, 1%, 2%. You know, are you willing, and is this going to be the new thing where realtors, because I think you pay for what you get. I would never just like you said, I'm going to go for who's going to take care of me because I'm going to take care of you. Same thing with the appraisal. I don't see why. Is it going to mess up the industry if this continues to happen?
Well, I mean, the industry's going to do what it's going to do. But, I mean, just as time, you know, I would say that you got to get the job done. It's like a performance-based business, and it doesn't matter if you do a discount or not. If you don't get the job done, it doesn't matter.
Yeah.
And there's a lot of downward pressures for agents to do more and charge less.
Yeah.
So it's offer and acceptance, you know. But at the end of the day, all my clients are happy.
Yeah.
You know.
I mean, that's the most important. I just think people always are looking for
happy.
discount. They're always trying, and I think there's a misconception that realtors kind of take a bad wrath, if you want to call it, because they're not.
And they should, because most agents are terrible. If I'm in a competitive situation, it's to my advantage because I do a good job and I can communicate effectively and I'm funny.
Scott, you're doing a lot of home warranties. Have you seen an increase in volume of home warranties, or is it decreasing? What's going on with you as far as the home warranty side of it?
It's decreasing quite a bit.
Is it?
Because people aren't putting it in the offer. I think because of multiple offer situations, now that that's dying down a little bit, it's good, but I'm starting to see the ripple effect of that where people go, yeah, we bought a house, but we don't have a home warranty, so we want to buy one. And then they realize that it's 30 days before it can go into effect.
Right.
And so that's becoming a little bit of a problem, especially with this record-breaking heat. So yeah.
Yeah. So you're seeing as many, if not more, people, or less?
Far less transactional. More people are buying them on a personal level.
Okay.
But it's usually after they've recently purchased a home and something's gone wrong, which we really can't help you for something that just went wrong and now you want to buy a home warranty. So that's what we're seeing. But as far as written into the transactions, nowhere near what they used to be.
If you have somebody that's an appraiser out there, and let's say you go and they do an appraisal, and they don't find something wrong with the property, and then let's say they go back to you and then they find something later, that's obviously the reason why you would get a warranty, is because sometimes it's not shown or something doesn't come up through the appraisal or the inspection, right?
Oh yeah.
And in that way, you're covering that part of it. Are you seeing a lot of people that are looking to get into, protecting themselves now in this market? Because I feel that there's a lot of, I wouldn't say that there's a lot of things missed, but I feel sometimes people are just kind of rushing through stuff a little bit. Are you seeing that too a little bit?
Absolutely. I've seen the home inspections that we don't ever concern ourselves with the appraisal.
Right.
But the home inspections, I'm seeing a really big decrease in quality.
Yeah.
Just because they're slapping them together. Everything's automated. They email it to you right there on premises. They don't take the time to analyze anything. They have drop-down menus on their little iPad as
Sure.
far as needs attention. You know, they don't take the time to write, hey, this condenser coil looks like it might be dirty. I would recommend having it cleaned, something like that. It's like multiple choice on their little iPad, and then they send it to us for if we question it right off the bat, like 3 days in, they say, oh, we needed to make a claim. And then we get this inspection, and I'm like, this doesn't tell me anything. And so then it comes down to a judgment call. But yeah, that happens a lot. I don't want to condemn inspectors. There are a lot of good ones out there, but
well, you look at new homes, and they're passing a lot of the costs. We all know the costs are up for new homes.
Sure.
But I would say that buying a home warranty on a new home, there's a lot of people that when they get to the final finish line, they're just trying to rush everything. The builders, they're trying to push everything together, and that might be also an opportunity to get a home warranty because you would go to bat and say, hey, you know what? They didn't do this right, or this wasn't put in, or this is protecting you here. But how many times do you guys see where builders right now, because they don't have the manpower, also the materials, that they're really just kind of piecing it and rushing it together at the very end. And then a lot of times the clients go in and go, that's not what I ordered, or that's not what I wanted, or this is different than what I anticipated. So I think there's a big part in that, right?
That's always going to happen.
What we offer at Dwellness is we have a new home construction warranty.
Okay.
And what it does is it kicks in 1 year after the close of escrow, which is typically when the builder's warranty is going to go out. So we insure it for 4 more years after that. So that's one of the things you can get a little peace of mind on that. I know a lot of people that have a home where, let's say, even before the builder's warranty even kicked in, there's already problems, largely because of what you said, as far as, especially now with supply chain issues, things like that. They're saying, I'm just going to substitute this with something else because we got to get this home done. The carrying costs on the construction and everything like that is too high. We need the cash flow of the sales. So they'll slap something together, and then it does wind up being a problem.
Guys, we're going to end the show because we've been on here for quite a long time. It's been about an hour and a half. We want to thank everybody out there for coming in on the show. You guys have any last comments? Anybody want to say anything before we end the show? I always give this platform. Do you have anything to say, Matt?
Just in and out.
I guess that's what we're having for lunch today.
In and out is happening.
We appreciate you guys. Please come back. We'll be here on Tuesday, and we'll try to have all the information that we have here. We're going to have everything set up for everybody that can get in contact with Andy. I don't know if you would ever need an appraisal. Also Scott, and we'll have Matt as far as you know how to get a hold of Matt. He's on here every week. And we got Joe Dragon. He's back. So you guys, thank you so much for tuning in, and we'll see you guys at the next stream on Tuesday. You guys have a good weekend.
Thank you for watching an episode of the French Workbench Podcast. If you want to tune into past episodes, please subscribe to my channel now. Also, if you want to look at our audio-only options, we do have iTunes and SoundCloud.